Welcome to Talk Tickers. Today we're jumping into Snap Inc.'s first quarter of 2025. Seems like the market took it pretty well overall. Looks like some decent user growth and financials improving.
Yeah, absolutely. Overall, a positive reception, I'd say. The big headline numbers, well, monthly active users crossed 900 million.
900 million. Wow, getting closer to that billion mark they've talked about.
Exactly. And daily actives hit 460 million. That's up 9% year over year.
Okay, 9%. Where's that growth coming from mainly?
It's really being driven by the rest of world category. That's where the strongest growth is.
Interesting. So North America and Europe.
North America actually dipped slightly, both from last quarter and year over year. Europe was flat quarter over quarter, but did grow compared to last year.
Right. So the focus must be on getting those core markets moving again. What about revenue?
Revenue looked pretty good, came in at $1.36 billion for Q1.
And the growth rate there?
That's up 14% year over year. Seems like direct response ads, SMBs, and Snapchat Plus are fueling that.
Snapchat Plus. We should definitely talk more about that later. And profitability, EBITDA.
Adjusted EBITDA was $108 million. That's a really significant jump from the $46 million they posted in Q1 last year.
Okay, so bottom line, improving. Free cash flow, too.
Yep, strong free cash flow, $114 million generated in the quarter.
And you mentioned Snapchat Plus. How are the subscriber numbers looking?
Really impressive, actually. They're nearing 15 million subscribers now.
15 million? That's huge growth.
It is. It's up 59% year over year.
Yeah.
And they calculate that's generating an annualized run rate of over $600 million.
Wow. Okay, so that's clearly becoming a significant piece of the business.
Definitely a key diversifier.
So let's dig a bit deeper then. You said user growth is strong outside NA and Europe. What's the plan to, reignite things in those more mature markets?
Well, they're focusing on a few things. Enhancing the core visual communication part of Snapchat.
Makes sense.
Using more AI and machine learning for ranking content and personalization.
Mm-hmm.
And really boosting their creator ecosystem.
And are they rolling out new features to help with that?
Yeah, they mentioned things like streamline group messaging, Snap Replay, features designed to deepen connections and, make the app stickier.
You mentioned AI. I saw a note about Gemini integration.
Right, with my AI. That seems to be paying off. They cited a big year-over-year increase in my AI daily active users in the U.S. because of that. Over 55%, I believe.
55%, that's substantial. So AI is driving engagement.
It seems so. They also said global time spent watching content is up year over year. Again, pointing to AML improvements in figuring out what content people want to see.
They're getting faster at it.
Apparently so.
Yeah.
They mentioned doubling the pace at which their machine learning models integrate new trends and user signals.
Which would mean more relevant content faster.
Exactly. And related to that, views on Spotlight posts the really fresh ones. Yeah. Less than 24 hours old, those views have doubled year over year.
Okay, so the feed feels more dynamic. What about the app layout itself? I heard they were texting things.
Yeah, they're testing a refined 5-tab interface. Sounds like they learned from a simpler 3-tab design they tried before. Try to find that balance between, user experience and monetization opportunities.
Right, always a tricky balance. Let's talk about the creators. You mentioned the ecosystem. What's the SnapStar program?
So that's their program to really support and prioritize creators who are native to Snapchat.
And is it working?
Seems like it. Spotlight posts by Snapstars in North America grew over 125% year over year.
Wow.
And they also highlighted that more creators are hitting that Snapstar status organically, just through their own growth. They gave an example, Bridget Ugarte. Her follower count grew tenfold in 6 months.
That's pretty rapid growth, shows the platform can still elevate people. Mm-hmm. What about AR creators? Augmented reality is core to Snap, right?
Still very much is. They have over 400,000 AR creators, developers, teams using Lens Studio.
400,000?
Yeah. And they've created over 4 million lenses now. Plus, their latest spectacles, the 5th gen, just had their 6-month anniversary. They're adding new lenses, platform features like advanced hand tracking, keeping that developer community engaged.
Okay, interesting. Let's shift over to the money side, the advertising platform. Sounds like progress there too.
Definitely. They talked a lot about improvements in their machine learning capabilities for ads.
How so? What specifically?
Well, things like improving model freshness, using privacy-safe signals better, optimizing ad formats. They said they've increased the rate their models learn by 6-fold.
6-fold how?
By scaling the training data, basically feeding the models more information. They mentioned a 5-fold increase in the historical interaction data used for training.
Okay, so smarter, faster ad models. Any impact on specific ad types?
Yeah, they consolidated their app-based advertising models.
Yeah.
That seems to be helping optimize for app conversions. SK Network app purchases, that's the iOS privacy framework, those grew more than 30% year over year.
That's a key metric for app advertisers.
For sure. And they're seeing good results from improvements to their automated bidding strategies. They highlighted Headspace.
Oh, yeah. What happened there?
Headspace apparently saw a 2 times increase in conversion volume with a 47% more efficient cost per action using the new bidding strategy.
Nice. And new ad formats.
Yep, new high-intent formats specifically for dynamic product ads. They mentioned partnerships too, like with ROI Hunter and SixthStreet.com.
Seeing results there.
A 76% increase in return on ad spend and a 22% reduction in cost per action using those dynamic product ads.
So it sounds like getting good signals from advertisers is crucial.
Absolutely. They emphasize signal quality a lot. And adoption of their conversions API is growing. Over 60% of direct response ad revenue is integrated now.
And that helps advertisers.
Yeah, they gave Foot Locker as an example. Significant drops in cost per action and higher return on ad spend after implementing the conversions API.
Okay. Any completely new ad products?
They've started limited testing of sponsored snaps as a biddable product in the auction. Early results are encouraging, they said.
Sponsored snaps. Like user snaps. Or...
The details were a bit light, but sounds like integrating promotional content more directly into the auction flow. And they also launched sponsored AI lenses.
AI lenses for advertisers? What does that even look like?
Bringing generative AI-powered AR to ads. Things like highly interactive, maybe personalized AR experiences sponsored by brands. It's early days, but definitely fits their AR focus.
Okay, fascinating. Let's circle back to the overall financial performance then. Revenue up 14%. What drove that specifically?
So direct response advertising was the main engine. That segment grew 14% year over year.
And how much of the total ad pie is that now?
It's about 75% of total advertising revenue.
Okay. What about brand advertising?
That was actually down slightly, declined 3% year over year.
Interesting. But overall, advertisers are growing.
Massively. Total active advertisers grew by 60% year over year.
60%. Wow. Is that mostly small businesses?
Yeah, driven primarily by the SMB segment. They've clearly had success attracting smaller advertisers.
And the other revenue, that's mostly Snapchat Plus?
Primarily, yes. And that was up 75% year over year. Huge growth there.
Let's look regionally again. North America revenue growth accelerated.
It did, yeah. Up 12% year over year, which is faster than previous periods. Europe grew 14%, and rest of the world led the pack again at 20% growth.
Okay. And impressions versus cost. More people seeing ads.
Global impression volume grew about 17% year over year. So, yes, more ads being shown.
But prices, ECPMs.
Total ECPMs were actually down about 7% year over year.
Why is that? More supply than demand.
That's what they attributed to, yeah. Inventory growth sort of outpaced demand growth in the quarter.
Okay. What about their costs? You mentioned AI investments.
Right. Adjusted cost of revenue increased 12%, and they said that was mainly due to ML and AI investments. But infrastructure cost per daily active user was actually at the low end of their guidance range.
So managing those costs, okay. Margins.
Adjusted gross margin improved slightly up to 53% from 52%.
And operating expenses, hiring, etc.
Adjusted operating expenses were up 7% year over year. Personnel costs specifically were only up 2%. So fairly controlled on the OpEx side.
All leading to a better bottom line, presumably.
Yeah, the net loss was significantly reduced compared to Q1 last year. They also kept buying back shares and refinanced some debt, reducing their total debt outstanding.
Okay, so financials generally moving in the right direction. What did they say about the outlook? Q2 guidance.
This was interesting. They actually didn't provide formal Q2 revenue guidance.
Oh, why not?
They cited macroeconomic uncertainty and mentioned they experienced some headwinds right at the start of Q2.
So some caution there for the current quarter. Did they update full year guidance on costs?
They did. They actually lowered their expectations for full year adjusted operating expenses and stock-based compensation.
Okay, so tightening the belt a bit there.
Seems like it.
Yep.
But they kept their guidance for infrastructure costs per DAU the same.
So despite the near-term caution, are they still optimistic long-term?
Oh, definitely. They expressed optimism, pointing to the ad platform improvements, the revenue diversification with plus cost discipline, and, a strong balance sheet.
And the strategic priorities remain the same?
Pretty much. Growing the community, improving engagement, driving revenue growth, diversifying revenue, and pushing forward with their long-term AR vision.
Got it. So if you were to summarize the key takeaways for investors listening, What should they be focusing on from this quarter?
I'd say first, the strong performance and direct response ads,
Yeah.
and especially the huge growth in SMB advertisers. That's a really positive signal about the platform's utility for performance marketing.
Okay, what else?
Second, the Snapchat Plus growth is undeniable. Nearly 15 million subs, $600 million run rate.
Mm-hmm.
It shows real potential for subscription revenue to be a serious contributor.
Right, that diversification is key.
Third, you have to watch the North America DAU situation. It's a bit soft. Their efforts on engagement and content innovation there are crucial to watch. Fourth, the caution around Q2 revenue reflects the broader economic environment. It's a reminder that the ad market is still choppy.
Understandable. And finally,
the continued heavy investment in AI and ML. It underpins everything. Ad performance, content engagement. It's fundamental to their future growth. So watching how that evolves is critical.
okay, that's a great summary. Now let's move to our This Is Not Financial Advice segment. Time for an outrageous but plausible trade idea based on all this Snap info. You got one.
Okay, here's one. Playing on that subscription momentum. Given how well Snapchat Plus is doing, nearly 15 million subs, growing fast, you could consider a speculative pairs trade. Go long Snap Inc., betting on that continued subscription success.
Okay. And short what?
And simultaneously short, maybe a more mature social media company, perhaps one where subscription revenue is flat or even declining. Or maybe they don't even have a significant subscription play.
Interesting. So the rationale is Snap's subscription growth provides a tailwind that outperforms a peer lagging in that area.
Exactly. The idea is that Snap's tapping into something with Plus maybe better than some older platforms can. But, huge caveats.
Of course, highly speculative.
Totally. Snap's sub growth could slow down anytime. The other company might have other things going for it or launch its own successful subscription product.
Yeah.
Big risks.
Definitely outrageous, but plausible. All right, good one. So that wraps up our deep dive into Snap Inc.'s first quarter earnings. Key points. Strong user growth overall, especially outside core markets, significant gains in direct response ads, and that booming Snapchat Plus subscription base.
But also that cautious outlook for Q2, given the macro picture and the ongoing need to re-energize growth in North America and Europe. The focus on AI, AR, and creators really remains central.
Absolutely. So what stood out most to you listening in? What questions does this raise about Snap's path forward? Remember, this has just been a summary to get you up to speed. Always do your own thorough research before making any investment decisions. Join us next time on Talk Tickers as we unpack another crucial earnings call.